What's good, everybody? Today was an absolutely beautiful day on the charts. I'm feeling mad, like zen, chill right now. We're listening to some jazz, run through a trade recap, and we're gonna go over some topics like the daily objective. We're gonna go over how to get high R on shorts. We're gonna go over how to position yourself for multiple TPs, find a quality DOL, and then finally, we're just gonna look at some psychological stuff on how we have to let trades come to us instead of forcing them to come, or instead of forcing them to be on the charts. Without further ado, let's go, baby. Alright, everybody, quick little sneak peek of what I took right here. We're just going to go over how I figured out what the market wanted to do, what I saw, and pretty much everything that I saw going into the day. So yesterday we started off with how can we find the weekly objective, right? What's going to be a point for price to trade to and potentially react off of, right? So the biggest one for me was this previous weekly high, or on here it would have been, yeah, same thing. So next we're going to pull, and keep in mind this is all-time highs, right? So extra confluence, right? So daily's not really giving us much. Zoom to the 4 hour, still not really seeing the most here, but the 1 hour is where stuff does get saucy, because in the 1 hour we had this really clean model play out. This was yesterday's trade that I didn't end up taking. I ended up actually taking it short, but go watch yesterday's trade recap to see why I did that and why I actually don't think it was a bad loss to take. So yeah, we had this super clean buy model play out to go take these, all this generated liquidity, and we wake up today with this high put in. We see a manipulation leg of that high. So once again, that ends up becoming a stop raid right here. So then our market opens right here on this candle, right? We end up seeing, I'm zooming to the 5 minute. We end up seeing a complete down move, right? But if you check out the correlation between these two assets, we had an actual SMT right here. I mean, on whatever you want to draw it on, it happened. Zooming to the 1 minute, we see this beautiful SMT get put in place. However, there was really no opportunity. Probably right here would be the best stuff to draw. But there's really no opportunity, and this just shows like early morning manipulation, boom, right? Pre-market or right before market open, we see this bigger SMT get put in place. This is what I was actually looking at during the day, right? Because it's just showing now if we want to start a bearish model, we have internal manipulation at the highs to now potentially send us lower, right? So zooming lower, beautiful stuff. We had this SMT right at this high. We opened the market and we're already tanking, right? So 1 minute, if you just check it out, we literally open and dump, right? So on the 15 minute, we're now looking to be fractal snipers, right? We're looking to get our confirmation. Boom. We have 15-minute change of the state. Beautiful confirmation. Now, what you want to look for is a pullback to the change of the state or the equilibrium or the fair value gap, whatever it ends up being, and then potentially take a trade off of that, right? So right here, we have the same thing, change in the state, boom. Zooming in, we have ES pulling back, right, and immediately giving you a trade out of that. Now, if you were to be a demon, you could have most definitely took a 15-second trade right here. I'm not sure where you would have really had to get your entry. You would have had to get an entry on this maybe for a value gap or something. Once again, risk really wouldn't have been the best here, but the trade would have worked out. Now, where I ended up taking my trade that I believed was the best spot to take the trade was on this eventual pullback. Why is this the best spot to take the trade? Well, because we have, as we let the market develop, we have further confirmation, and we have confirmation that ES is our much weaker asset compared to NQ. If you look at these two, ES fully displaces through this and sustains it, while NQ pretty much sweeps it and kind of closes below to give us confirmation, but it doesn't fully sustain the move. And as well, if we watch on this slow grind up, ES is barely pushing, making a high resistant run where we can expect to see low resistance on the other side of that. Next, if we look at NQ, we have a full, complete low resistant run to go take out all of these highs up here, right? So that puts in place an SMT for us. So this is the best spot to take the trade because if we look, this lets us see a big relative strength difference where ES is now much weaker than NQ, right? So now let's zoom out. We always know that our first target for this is going to always be, if we take this trade on this pullback, our first target will always be this low-hanging fruit. Then we can look to leave runners to standard deviation and whatever the bigger time frame model is telling us we expect price to move towards, right? So here, the targets I was eyeing were 100% this low right here, and then these relative equal lows right here, and then maybe by extension this low, but I thought these are clean, and as well You cannot be picky and saying, I just want a little bit more, because then the market will bite you. And with all this R, you can really not be sad, right? So zooming in, I ended up taking my entry right on this point right here. Right on this fair value gap. Stop at this high. First TP wasn't all the best risk reward. And then we draw in standard deviation here. This would be where you draw it in on the manipulation leg. Now, I've been kind of forward testing this throughout my trades. A lot of times when 2 is lined up with that first take profit, we can always just extend our take profit to here. Something I'll have to continue looking in towards. But I do think that I've seen this work pretty consistently, and I'll maybe start implementing this, because this can change your first TP from, like in a situation like this, from what we can get 1.47 to a 1.68. So definitely something to look into. Next TP would be aligned at this 3.5, so I took it off right about here. But once again, if we see on the same exact move that this gets hit, we then see our standard deviation get hit, right? So really great stuff, no problem with this at all. So if we would have just held this right here, we would have seen the same exact move, same exact thing, but we would have just gotten more risk, right? Next we had final take profit was this guy, 4.42, ending off the day mad solid, right? Really can't complain with this. It was a super great trade. The one thing I want to go over is this change in the state, right? So changing the state on this model right here would be right here. We mark change the state here. Now, a lot of people don't like to mark their change in the state here. People don't like to mark this because it's not big enough, it's not pretty. Let me explain this. Changing the state is a measure of market switching directions, but it focuses on delivery. It focuses on the actual narrative of where the candle body is showing us the price actually wants to go. Not what are the wicks doing, how pretty are the candles. It is a exact show of narrative and actual direction in price. Delivery, that's the best word. Where does price want to deliver towards? So let's look. The pattern that we want to see, right, is we want to see a level, right? Say our level is right about here. And we want to see a bearish model out of this, right? What we want to see is price poke its head into the level, right? We want to see a little bit of a retracement, and this is where people immediately jump in shorts, right? The market will then fake them out, create a stop rate, and then this is our manipulation leg right here. We then expect the market to close below, and that's where we can mark our change in the state. So now look, if this happens on this small of a basis, the fact that the narrative of what the market did is actually still there shows us that this doesn't matter how small this can be. If this is this small, it does not matter. But it's not clean, which is the reason people don't like it. And in this exact situation, we would have a bit of an imbalance sitting here, right? So I would still want to wait for price to show me, okay, are we going to pump higher and then maybe do this whole thing one more time? Or is this actually what we're looking for, right? So in this example, what I would wait for is I would wait for the market to inverse this big fair value gap, and after it's already giving me the change of the state, now that gives me confirmation to take my entry at that inverse, and then we'll go lower, and we'll get a pretty comparable RR, if not maybe a little bit better. Like, I mean, you really can't be complaining, right? When you have sniper entries like this, you really cannot be complaining. So that's what I just drew is exactly what we saw here. We saw a super low change of the state, waited for the fair value gap to get inversed. On that, we opened up a new fair value gap. BPR, I mean, whatever you want to call it, beautiful, right? You could have also taken this entry on equilibrium. Been watching this play out a lot recently. This also gives really good sniper entries, like in a situation like this. Our R would have been changed to 6, bro. So like that's super interesting and really good to look at. Change of state also got tapped, crazy R there. But yeah, this was a really great trade in my opinion. And if we looked at, if you guys watched my trade recap yesterday or the video I just put out about is your model actually really there, I was talking a little over my journal, right? And I said my win rate is drastically decreased when we don't have generated liquidity on the side because the trade could actually just be a rebalance to price and not a hunting liquidity move. So right here, that's why I didn't take this trade on NQ, because if we look at NQ, well, this eventually gets delivered and we still had great R with this. We didn't have any generated liquidity to the side, really. It was all just imbalance price action. So on here, we have complete generated liquidity, especially after this move, because now we have low, 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 complete generated liquidity, no imbalances running away. This is exactly what I want to take my trade off of, right? Last thing I want to go over is how can we find high quality drawn liquidity, and how did I know that price would hit this? And from there, what's my action plan, right? That's fine. So zooming out, as you mentioned the 4 hour, I just want to simply ask myself, where is the liquidity resting, right? So in this model, why did I expect price to start slowing down right here? And that's where I took my final take profit. Well, I look and I say, okay, I want to see where the generated liquidity is, because the market really hides it. It really puts it in there. And if you can just simply look with your eyes, you can find out where is the generated liquidity. Where do we see stacked highs and lows? Okay, we have an entire pool right here. This is where the market hunts pre-market, right? This would have actually been a pretty nice trade pre-market, and we had an SMT at this high. Hold up. We don't look. You have to look into this. Hold up. SMT at this high. Let's take a quick little look here. So SMT at the high. Probably could have taken an entry on this pullback right here. That would have actually banged. That was actually a really nice trade pre-market. All right, but we want to look for where the pools of buy side, sell side liquidity is resting, right? We can see that through stacked lows, equal highs, equal lows. And we can also see that through nestled liquidity. Now, nestled liquidity is an example like here, right? Where, actually, let's move to the 1 hour here, where we have a fair value gap here. And then we also have a low in that fair value gap or a high in that fair value gap, right? So when we have a sting in, we can expect this to be more high probability for price to pull towards it, because we have a fair value gap here. So if price wants to rebalance, it can use this as a rebalancing move while also hunting liquidity. Or if price just wants to hunt liquidity, the low is right here. So we pull two reasons why the market can also pull back just by doing this. So we want to look for where's our general liquidity levels. I would say the first low is right here. This was a great low to target, but we already pulled this by the time we hopped in the position. So the two targets I was looking for are right here. And as you see, they were perfectly aligned with standard deviation, which just increases and adds to my bias, right? Finally, we can zoom out in this range and we can just look at this and say, okay, we can also be looking for equilibrium of the range, right? So on a long, we could have been saying, okay, I want to see equilibrium of the range. That also adds to our bias, right? Same thing here. And then when you draw this out, and you see equilibrium is perfectly aligned with this level right here, we know that this is now a high quality draw on liquidity where we can expect to see price pull towards. In my opinion, we don't take trades off of just one confluence. We take it off of narrative, which is a story built on multiple confluences, correct? When we have multiple things that tell us this is where price could go, infinitely more probable than just one thing or two things. If you have 3-4 reasons, look, we have generated liquidity, market maker model right here. We have all-time highs getting hit. We have a pullback to equilibrium. We have standard deviation. That is really like 3, 4, 5 reasons. This is high quality. And at this point, once this high quality drawn liquidity gets hit, I don't expect the market to just continue. If I expected the market to just continue pumping or dumping like this for the rest of the day, then I would have held my position down to here and been a millionaire, bro. But we have to understand that the market has a bit of an objective, right? And if the better you get at finding the high quality drawn liquidity, the better you get at finding the objective for the day, right? Where a lot of times we'll see price make a great move in the AM just like this. And then what I expect price to do for the rest of the day is once it's hit this level, I expect it to just consolidate with no really relative strength in either direction. Maybe pushing a little bit lower, making a bit of a model here, not delivering on it. Doing stuff like this. This is what I expect to see price do for the rest of the day. If we look right here, we had strong direction. We had strong direction until we hit this low. And now we're playing around. We're playing around right here. This is not where we want to trade. We do not want to trade in any of this right here. Any of this we do not want to trade. We simply want to take the efficient move in the morning and get rid of this inefficiency right here. All right, so after that beautiful AM trade, that analysis, the growth that we just endured in our technical analysis, we have to come back and we have to feed our minds, right? The one thing that I learned from today, the one thing I felt from today was, I'm going to keep it honest with y'all. I woke up late today. Hopped on the charts at 7:30, an hour after market open, and I was just in time to take this trade. Just in time. But the fact that I didn't have to wake up and harass myself to get out of bed and push it like I'm one of those hard ass, grinding ass dudes on Instagram, because of that, it shows that you need to let trading do its own job, and the trades will come to you. You don't have to sit there and force them and sit there like the scoundrel, like I'm hunting for trades. I'm not hunting for trades, I'm letting them come to me. I place my traps, place my alerts. I'm sitting here, back, chilling my coffee. I'm listening to my jazz. I'm just waiting for the trades to come to me. The fact that Some days you feel like, all right, I'm going to get on the charts early. I'm going to lock in today. Some days you sleep in late and you get up and then the trade's right in front of you. It shows that whatever you do does not change what the markets are going to do. They're going to do the same thing every single day. It is simply your job to realize when the opportunity is in front of you and seize it. If we let the trades come to us and we don't chase the trades, we exchange striving for arriving. And I can go on for hours about this topic, but it's about where your self-worth is, what you view everything as. If you view yourself as already arrived as the trader that you want to become, you view yourself as a profitable version of yourself, and you simply just do the same actions as him, you'll be profitable. No. But if you view yourself as, okay, I'm grinding to become profitable, that is where you see the unprofitable moves, you see the mistakes that an unprofitable trader makes. If you simply decide to yourself that I am a profitable trader, that I do the same things as a profitable trader, and that this is my new life, I do the same actions. It's the be, do, have, bro. You be the things that they have, and because you want to become this person, so you do the things that they do, and then all of a sudden you have things that they have. It's that simple. If you just follow this framework with trading, and you let them come to you, you can then cherry pick trades. Because there's so many coming to you and you live from abundance, not scarcity of I need to chase every trade that's out there. You let them come to you and you say, bro, I have 3 trades a week. I have 2 trades a week. I don't care. I'm hype, right? You let the trades come to you. You can cherry pick and say, I like this one, but there's just one thing. I don't know if I want to put my capital on the line for that. That's fine. That's fine. That's what your job is as a trader, to identify the highest, best opportunity and execute your system upon it. It's really that simple. If you can sit there and you can let the trades come to you, you can work from abundance and you can cherry pick, and your income and everything will skyrocket more than you've ever seen. You'll find inner peace. You will not tie your worth to how you've done on the charts, because when you can sit there and you can say, I'm better than this market, my standards are too high, that is when you know that you've matured, because now you don't need the trades. It's like when you're talking to girls, if you come up to the girls desperate and you say that like you need them, you act like you need these girls, they're not going to want to get with you, bro. But you nonchalant, you playing around a little bit, you jab in, they jabbing back. That's how you play, bro. You just sit there and you let the market give to you, bro. Just sit there and treat the market almost like an ex-girlfriend who texts you back. Like, you got to give her a little bit of your time, but you really have to identify when is the right time for me to engage here. And the rest of the time, so you be sit back and say, I'm chill, bro. That's how we want to think. We want to work from abundance, not scarcity, boys. Thank you all for rolling up today, and I'm super thankful that you guys hopped on. If you guys learned something, just let me know, because I love to read these comments, see that I'm helping people out. Whatever it ends up being, thank you all for coming here today, and I pray you all learned something. I pray you guys can apply something from today. In your trade tomorrow, identify where is the high quality drawn liquidity, and then watch what happens when that gets hit. Does price push through it drastically and give us a great move for the rest of the day, or does price hit it and kind of consolidate? Because I want you to really recognize this. And then once the drawn liquidity gets hit and we know there's consolidation coming, you guys have built so much confidence about this objective consolidation that's going to happen after that objective gets hit, right? And because of that, we know, okay, I don't want to trade after that gets hit, because I don't think that the market's going to pump another 100 points after dumping 300 points in the overnight session. Something like that, right? If you guys understand this and you recognize it, you can save yourself from a lot of losses. So see if you guys can do that in your trades tomorrow and the rest of the week. Thank you guys for coming out today. Hope you guys have a great day. Catch y'all boys later. Peace out.